Hey everyone, this is going to be a quick video going over bias in trading, why you shouldn't be biased and what you should do instead. So I'm going to go over this example of a trade I took yesterday, and basically for this trade I was looking to take a long position before I took the trade, but ended up taking a short position. And let me quickly run you through this trade. So the first thing that I saw was we were bearish on the 4 hour, but on the recent candles, we've pushed up, created a lower high, and we gapped down on market open. Now we haven't closed this gap yet, because I took the trade around here, and we didn't close the gap yet. So I saw this, and I also saw that we were consolidating on the 1 hour, and my thought process was that we might push up towards the highs of the gap, possibly even further, to close the gap, because there is a high probability for the gap to get closed. Usually market open gaps get closed the first day, and it just didn't happen. So I started my analysis on this candle, this 15-minute candle, and I saw that this one had pushed just above the highs, and we started retracing. So on the 5-minute I was waiting for my entry. So it was basically just a consolidation breakout, because we ranged for the entire Asian session, and I was waiting for the consolidation breakout. And on this candle, I was waiting for my entry. I was waiting for this candle to close above. Then we pushed down and closed back down inside of the range. We started pushing down, and my initial thought was that this was just a retracement. So we started pushing up again, and suddenly we failed to break above and continue. So I was still looking for that long position, but it was looking to be highly unlikely. And what happened next was we completely broke out of the lows of the range. We broke market structure on the 15-minute, the 1 hour, 1 minute, and 5-minute. And I immediately flipped and went short. So I was looking to go long, and what happened was the market proved me wrong. The market reversed and went bearish, and I reacted accordingly. I took my short position. And a lot of traders, what they do is they get onto the market and they see the market is moving in a certain direction. Like, for example, over here, a lot of traders were waiting for that long position to play out. And next thing you know, that long position is no longer going to be played out. It isn't going to happen, because the market proved you wrong, right? And instead of fighting against it, and what I mean by fighting against it is you were looking for a long position. The market proved you wrong by reversing and going short. So the market is no longer bullish. And fighting against it means you are sitting there still waiting for a long position to play out. And a lot of times what might happen is, say for example, if you look at this candle, this doji candle, I used to, in my early days of trading, whenever price pushes a certain direction and I would see a doji candle, I would immediately go against the market. So in this example, the market pushed really strong to the downside and formed this doji. So a lot of times I would have taken a long position and put my stop below the previous candle, try to target the 2 or 3 risk to reward. Because if you go onto YouTube or anywhere, you will see a lot of beginner courses teaching you that doji candles mean reversals. Doji candles don't mean anything. In all honesty, doji candles really don't mean anything. A doji candle can do anything. A wick can do anything. It doesn't mean just because a doji formed that price is going to reverse, because it didn't. Sometimes it does, sometimes it doesn't. The point what I'm getting at is the market does something and you need to react. So in this example, price created the doji. Now in reality, what a doji is just consolidation for a small period. A doji candle is just consolidation, that's all. So instead of going against the market, because clearly we are in a bearish market at this point, so I would be going against the market if I would take a long position here, and some traders still do it. Instead of doing that, you need to see what price does after this doji candle. And as you can see, price continued down. So you could have just taken a short, because you saw, because like I said, it's basically just a consolidation candle. That's all it is. And price broke out of that candle to the downside. You could have went short and gotten a really nice trade out of it also. Now the thing is, if I went onto the charts, saw my long position, and no matter what, only looked for this long position and waited for this long position, I would have never gotten this long position. I would have never have been able to enter it. I would have waited the entire day, maybe over here on this candle. It could have been a good idea to enter and, you know, go long because we broke market structure. But as you can see, it probably wouldn't have played out because we're barely moving anywhere. And yeah, it just was a low probability trade to be waiting for, because at the end of the day, the market is bearish. After this candle, the market is bearish. We are no longer bullish. And there is no point in sitting and waiting for a long position to play out. So instead of being biased and sitting and waiting only for one thing to happen, because this is exactly what I did, and this is why I was able to take this trade. I didn't go onto the market and think, okay, I'm gonna wait for this long setup, and that is the only thing that it's gonna happen. There's nothing else. It's impossible to think like that. You cannot think like that. The market can do three things: consolidate, move down, or move up. That's all the market can do. It can either go sideways, go up, or down. So if you consider that, why are you only looking for one thing to happen? So, in this moment, I was waiting only for this long position. Of course, that makes sense because it looked like the longs would play out. But I didn't plan only to take this long position because I know anything can happen. I also planned that if we get a breakout below this range, I would go short. And that's exactly what happened. I went short. And I will put up the screenshots where at 8:30 on Monday morning, I let my Telegram community know that I was looking for this long setup to play out. And about half an hour later, I let them know that I'm in short because we broke market structure. We reversed. So I didn't sit and wait for the long setup. I didn't tell them, listen, I'm going to wait for this long setup to play out. It looks like we're bearish, but I'm going to still wait for this. It's stupid. You're going to wait for nothing. You're waiting for nothing. You're going against the trend. Why not take advantage of what the market is currently doing and going with it? And that's exactly what I did. So before you get into every trading day, you should be planning two things. First, you should be saying, if the market does this, how will I react? So if the market breaks above a certain level, what will you do? Will you go long? Will you wait? Will you go short? If the market breaks below a certain level, what will you do? Will you go long? Will you wait? Will you go short? What will you do? And you need to ask yourself this question for every single trade that you are planning. If this trade doesn't show up, it doesn't play out, what will you do instead? Will you wait for another setup? Will you react to the market and whatever the market does at that point? Will you follow it? Will you close the charts and walk away because your setup didn't play out? Or will you go against the market? You need to ask yourself these questions because you need to accept that anything can happen. You could be waiting for a long setup, but in reality that setup is never going to play out. The market reverses and you shouldn't be sitting and waiting for that setup anymore. You should be going with the market. The market proved you wrong. So why are you fighting against the market? You should never fight against the market. Because if you fight against the market, you could be missing out on certain trades. If I had waited for that long setup the entire day, I would have never gotten this trade. And that is basically it. That's all I wanted to say. You should plan two things. If the market does this, what will I do? And if the market does that, what will I do? As simple as that. Don't wait for a certain outcome because the market is uncertain. Nothing is certain in trading. You should always think in probabilities and you should always react to the market and not predict it.